One man is trying to disrupt the global multilateral trading system. President Trump is on the rampage. What are the consequences of Trump's tariffs, particularly for India? Welcome to Geojit Spotlight. Something unusual is happening in the world. The US, which has always been the leader of the Democratic Alliance, is moving away from democratic group like the European Union and moving towards Russia. Also, the US, which has always been in favor of multilateral trade arrangements, is moving away from multilateral trade and moving towards bilateral trade, that is trade between countries, and trying to strike deals with countries separately. Let us try to understand the possible consequences of these big changes in trade policy. Consequences for the global economy, particularly for India. Trump's 25% tariff, import duty that is, on imports from Mexico and Canada came into effect on 4th March. Tariffs on Chinese imports have been increased to 20%. Mexico, Canada and China have retaliated by raising the tariffs on US imports. So a trade war has started. What will be the impact of these measures? One, this will increase inflation. When import duties increase, the landed cost of imports will increase. This will be passed on to consumers. So prices will rise. Prices will rise in Mexico, Canada, USA and China. Two, global growth will be impacted. IMF had estimated global growth to be 3.3% in 2025. It would be difficult to achieve this growth if global trade continues to be impacted by uncertainty triggered by President Trump. If global growth declines, India's growth also in FY26 will be impacted. 3. India too will be targeted in the reciprocal trade policy to be announced on April 2nd. Trump had repeatedly described India as tariff king. So India will be imposed new taxes. There will be reciprocal tariff. Reciprocal tariff means US will impose the same tariff which other countries impose on US goods. Now we don't know how this will end. If these tariffs and retaliatory tariffs lead to a full-blown trade war, that will be bad news. But a settlement also is likely. Yesterday, Trump exempted Mexico and Canada, their Canadian and Mexican auto imports from tariffs. This means settlements are possible. That is Trump's ultimate aim, to negotiate from a position of strength and reach settlements. What should investors do now? Investors should be cautious. Of course, there are many positives in the market now. India's GDP growth rate has picked up in Q3 of FY25 to 6.2%. GDP growth and corporate earnings are likely to improve in FY26. This should be good news for the stock markets. Importantly, market valuations have reached fair levels. There are buying opportunities in Nifty 500, that is among large caps, mid caps and small caps. The problem is the sustained FII selling. Also, if any news come, the market will react to that. For instance, if India is targeted in the April 2nd trade policy, the reciprocal tariff policy, and tariffs are increased, it will impact specific sectors. For example, if tariffs on pharmaceutical imports to US are increased, India's pharma exporters to the US will be impacted, despite their solid business and fair valuations. The valuations are fair now in pharmaceuticals because of this concern regarding what President Trump will do in the April 2nd policy. Investors should play it safe. Now, safety is in domestic consumption-driven segments like financials, telecom, aviation, hotels, etc., which are likely to be not impacted by Trump's tariffs. Defense stocks are fairly valued now. Approach the market cautiously. Wait and watch for clarity to emerge.